Creative for quite recordings in progress, everybody. I've been a member of Charlotte Creative for quite some time now. I am the current treasurer for the organization with the board. And so Charlotte is Creative means a lot to me and the city of Charlotte. So I'm very happy to be here today. I'm a certified financial planner. I have my own financial planning firm. My office is located up in Cornelius, a little bit north of the city. And I help business owners and individuals make better financial decisions with their money. So whether that's investments or taxes or cash flow or growing businesses, all that good stuff is what I do for clients every day. So I'm here to give you guys some kind of like we said in the beginning, nuggets and tips and tricks to help you put more money in your pocket and keep more money in your pocket. So but I definitely want this conversation to be two ways. I have a PowerPoint put together. I will preface that by saying I am I'm the treasurer of the organization, not the creative brains of the organization. So my PowerPoint is not especially attractive, but it should be some good information. That being said, throw questions into the chat as you think of stuff. At the end of the day, I'm here for you all, and I want to talk and answer questions about whatever it is that is top of mind for you. So if I spend the 2 minutes on my slides and 58 minutes answering questions for everyone, I have no problem doing that. So please don't hesitate to put questions in the chat. I will stop frequently to see what questions are there. Seifu will help rattle those off. We'll get that stuff answered for you. And I'll also share my contact information afterwards for anybody who just, has questions. Maybe it's something more one-on-one or personal question. I'm happy to help however I can. So we will dive on in here. Let's go. Hey, there we go. Okay. Let's minimize all this stuff, make sure everyone's good. Hopefully everybody can see the screen, right?
Yes, perfect. Yep.
Okay, great. Awesome. All right. Now we'll just get the screen. There we go. Okay. All right. So I'm sorry. Say again.
My bad.
All right. So couple things that we're going to cover here today, just to give everyone an overview, and we'll probably jump into even more of this. I'm going to go through stuff pretty quickly. So again, don't hesitate to stop me, and we'll leave plenty of time for questions. So we're going to talk about the importance of knowing your break-even point, how much you need just to be able to break even, a few tips to help you find that point in your personal and business money, some tips about using credit cards, emergency funds, reasons to pay yourself first, and a whole lot more. So starting with your break-even point, many business owners, and it does not matter whether you are selling software or doing art, they fail to realize how much they really need just to be breaking even. And especially when you're a solopreneur, that's not just breaking even on your business stuff, but you have to be able to break even on your personal life, right? Are you making enough money to cover your business expenses and cover what you need to live, to pay your rent, your bills, take care of your kids, and all that stuff? And so it's really important to be able to come up with this break-even point to give yourself a baseline of business planning. How much do you need to sell? How much do you need to make? So on and so forth. Without having this break-even point, it's really tough to start to set goals and objectives looking forwards for the things that you want to do for your project or business. And when we know this, we can work towards things like reducing stress and saving for retirement and all that good stuff. So first, I want to show everyone just a quick example of how I show folks a way to come up with what your actual break-even point is, starting with your personal expenses. Most folks don't have any problem coming up with that amount for their business stuff. So, but we have to factor in your personal stuff as well. So this is just an example of a page that you can make up. You make a column for your fixed monthly expenses, right? These are things like car payment, mortgage, internet, cell phone bill, things that are literally the exact same dollar amount every single month. Then you make a column for what I call your fixed variable expenses, meaning like the energy bill, the water bill. We have it every single month. It's pretty close to the same, but it's not the exact same to the penny amount every single month. So put those columns in a list as well. But then we have fixed annual or semi-annual expenses. So things that we know we have to pay every single year, but they don't necessarily show up on our monthly credit card or bank statements. Then we have our variable stuff like our hobbies, drinking, partying, shopping, gifts, things like that. And then we have stuff that we're not expecting, emergencies, unplanned expenses. You know, you got invited to a friend's wedding last minute, whatever it might have been. So you can put all these things into a column and then total them up, okay? So here's a real simple way to do this. You've got your monthly expenses that you can list right here, and that's going to give you a monthly total amount. Then take all the stuff that we mentioned that is not necessarily monthly, but it does happen throughout the year, and they are bills that we know we're going to have. Estimate these figures and total them up. And then the same thing with the third column. So emergencies and these unplanned expenses that we know we're going to have. We don't know when, we don't know how much, but just pick an estimated number for those things throughout the year and total them up. Then take the second two columns and divide them by 12. And the reason we do that is that's just going to give us an average monthly expense throughout the course of the year for things that we don't actually pay every single month. So we have our actual monthly expenses, and then we have estimated monthly expenses based on things that we have to spend on throughout the course of the entire year. All right, why is this so important? This is so important because if we don't go about totaling things up this way, it is difficult to know what your actual break-even point is. And if you just go in and total up only the things that show up on your credit card or bank statement every month, you're going to miss a whole bunch of stuff that you have to spend money on every single year. And it's not going to get factored in to what you actually need to be making in order to break even. So I call this your annualized monthly expense number. So you add up your actual monthly expense with the estimated not monthly expenses with the estimated not monthly emergencies and pop-up stuff to give your total average monthly expending over the course of the year. So in this example, it's around $6,000 a year, not $5,000 a year. Well, that's 12,000 bucks. That's a big number. So once we get this number, now we have the ability to say, here's what I need just to break even on my personal life. Here's what I already know that I need to be able to break even to run my business and pay the bills or the studio rent, whatever it might be. And so now we have a total number monthly and annually that we know we need to strive for at a minimum to make sure that our business is generating enough revenue for us to pay our bills and live our lives. And this is really important for folks because if we aren't making enough money to be able to pay our bills and take care of ourselves and profit from the work that we're being paid to do by other people, then as harsh as a reality as this may sound, we really have a hobby. We don't have a business. And so this is it might seem silly, it might seem basic, but this is a crucial step in the business planning process, is really dialing in. Here's what we need to live. Here's what we need to be able to break even on our business and pay ourselves. And this goes back to the concept of paying yourself first. And if you're interested in learning more about that, there's a number of different books that are all about business owners paying themselves first, because then you can go, it's going to give you greater ability to grow and do other things within the business. Okay. So I'm going to pause there. And I'm going to see, do we have any specific questions yet, Seifu, or are we good?
We do have a question about stocks, but it's not about
Okay.
what we've gone through so far.
Okay, perfect. Stocks, I will definitely come back to that question closer towards the end, but we'll make sure that we don't miss it, okay? All right. So this is just basic stuff. Some of you might be already doing this, some of you might not be. Either way, check your numbers and make sure they're accurate, because I work with a lot of business owners that think they have their break-even point and they're off by quite a ways, both on their business and their personal. So don't forget about the stuff that just happens throughout the year. You got to factor that in because we need money for that stuff. All right. So moving along here, that's just a little basic about, come on. Like there we go. Okay. So a lot of the stress that we have as business owners comes from money, right? I mean, we don't have, we have zeros in the bank account. We can't afford our vacations, take care of our kids, do all of this stuff. So that's why this basic planning is so important, because we need to know, here's what our break-even point is. Therefore, here's the things that I can go out and plan to do. I need to be able to plan to sell this many pieces of art. I need to be able to plan to consult with this many individuals. I need this many students signing up for my classes. Whatever it might be, we can take the break-even number and we can combine it with here's how much I'm able to make per client. Therefore, and able to get to at least my break-even number, I have to have this many clients. When we do this, we can get a lot more specific with our goal setting. And that's extremely important when you're running your own business. Because if we're just saying, well, I'm going to do 200,000 in revenue this year, or whatever the number is, it's tough to just go out and do it. We need to break this stuff all the way back to, well, how many appointments and clients and conversations do you need to have just to have one customer? And on average, what does that one customer generate? And then we can start to put together the numbers and the plannings and the opportunities to get to these bigger numbers and these bigger goals that we have. All right, so I can't stress this sort of enough. And I've already touched on this, right? How much you need to live, how much we get paid on average per client, how much you net profit per client, and therefore how many clients you need just to live your life, not even, really making money and profiting and growing a business. This is just, here's what I want to be able to live, a comfortable lifestyle. All right. So I kind of talked through this. I can come back and talk more on this if we want to. We talked about measurable objectives. So let's skip to talking a little bit about credit cards, okay? Credit cards do not have to be a big scary thing if you're not already using them. I'm a big fan of credit cards, especially for business owners and business expenses. They are great ways to get yourself free money, free travel, cash back, materials paid for, all kinds of good stuff. The big trick with credit cards is you have to be able to pay them off every single month. If we are carrying a balance on credit cards at any point in time, that's going to really screw us up, because then we're paying interest, and that's just like paying credit card interest, in case you're not already aware, is like lighting money on fire. All right. It is not something that we want to spend even one penny doing. Okay. There's a lot of great credit cards out there for business owners. They just have to be used properly. What I recommend for folks, if you need a large expense covered and you're not going to be able to pay it off in 1 month, then consider a 0% interest credit card. This is one of the best ways that you can go out and get it's essentially a personal loan to yourself from a bank in half the time of going and applying for business loans and grants and all this stuff. You can apply for a 0% interest credit card, and they'll say, well, you have anywhere from 12 to 24 months where you get to pay 0% interest on that expense. So you got to go buy a $5,000 camera, and you're not sure that you want to use your cash in the bank to pay for it right now. Well, you could put it on a 0% interest credit card, and you could say, well, I've got 20 months to pay it off and make payments on it, and just plan to have it paid off before the 0% interest time is up. That can be a great trick to give yourself a little bit of leeway while you get the tools you need for your business to go make the money that you need and put a plan in place to pay it off over time. All right. If you are uncertain about using credit cards and you're worried you're going to overspend on credit cards and get yourself into a trap, that's a fair feeling to have. And if you feel really strongly about it, then don't worry about it and don't use credit cards. But if you think you're just a little uncertain, something that I recommend to folks all the time doing is only putting your fixed expenses onto the credit card. And make sure that you have, if you're going to have two, you have one for personal expenses and one for business expenses. They can both just be in your name. You don't have to sign up for a card that is technically listed in the LLC for that to be a card that is used for the business. All right. Most folks are solopreneurs and solo LLCs. And so you don't have to have a business card. It can just be a card in your name that you use for business expenses, and you have a card in your name that is used for personal expenses. But do not mix those two things together. That's a big no-no. It's going to cause you more headache than it's worth, okay? And if you're worried about overspending, then only put your fixed expenses on the card. That way, you should know how much roughly the card is going to be at the end of every single month, because it's just your fixed expenses. It's your, whatever business software you have, and then on your personal, it's your cell phone bill and your whatever, heat, gas, those things, the stuff what it's going to be every single month. And don't put any of your eating out or shopping or traveling or any of that stuff on the credit card. That will help keep your balances low. You'll know where it's supposed to be every month, and you can still get some points and build your credit along the way. All right. Points add up. I'm happy to come back and talk more about this. We talked about the 0% interest. Tax savings is a great, credit cards are a great way to get tax savings, because it just helps make it really easy to track your transactions for your business. So if you use QuickBooks, you put all your business expenses on a credit card, you link the credit card to QuickBooks, and it's going to automatically categorize everything for you. That way you don't need to go sifting through bank statements and such, trying to find expenses at the end of the year for your accountant. Everything's categorized right there. You can go in and put little notes into QuickBooks. It makes it really easy. So you get to get points for free money, and you get the tax deductions to make sure you're keeping more money in your pocket. All right. Different ways for savings for taxes and different types of accounts, okay? The best way to do savings, whether they are technically retirement savings or not, if you feel as though you are making enough, you have extra money, and you want to get disciplined with the savings, is to set up automatic savings plans. With technology, it is very easy to do. Once you've decided on the type of account that you need, you can just go into the account. There'll be a setting for automatic savings, and you go in and you type in, link it to your bank account, and it'll save the 200, 300, 400, 500, 1,000 a month, whatever it is that you want to save. It will automatically save it in there for you. Plans for small business owners. If you are a solo individual, if you are wanting to save less than $6,500 a year, you can just use a traditional IRA. You can just go into E-Trade or Fidelity or any of the self-service websites, or if you work with a financial advisor, and they can help you open an IRA, and they can set up automatic contributions for the money to go in every month. Super easy. If you are a business owner and you believe you want to save more than $6,500 a year, then one great option is a SEP IRA. These are great plans for folks that don't have employees. And I mean W-2 employees, 1099 contractors don't count. So if you don't have any employees, a SEP IRA is a great type of account to set up. If you do have employees, then you want to look a little bit more into 401k plans or simple IRAs. And I'm happy to expand on that if folks have questions. I know the last time we did that, folks had a lot of questions. So here are the 4 examples that I just mentioned. Roth IRA is another option as well. Roth is a great savings tool, does not give you tax savings for today, but is a great place to put money away. All right, so you have SEP IRA, traditional IRA, solo 401k, Roth IRA. The only one on here that I mentioned is simple IRA. Is great for if you're really starting to grow a company, you're starting to have more employees, then a simple IRA could be a great option for you. All right, so a couple of quick facts here. Okay, and I apologize, I need to update these numbers, but a SEP IRA, the max you can do is 58,000 or 25% of your net profit. Traditional IRA is now up to 6,500 or 7,500 for over 50. Roth IRA, same thing, 6,500 or 7,500. Solo 401k plans is also now 58,000 for 2023. Okay, I'm going to stop there. I can go back over any of that information, but that's the slides that I had today. I think I kept that about 20 minutes or so.
Yeah, that's great.
And now we'll open it up for questions, and everybody, whether I covered the topic, on the slides or not, is irrelevant. Whatever questions that you have, feel free to throw them out there.
All right, folks, you are welcome to throw some questions into the chat, or you can raise your hand and I can call on folks individually.
And I can answer the question about the stock.
Stocks. Okay, so that question is, what is the best method of purchasing stocks under a business name?
Yeah. So, to be perfectly honest, there's only rare occasions where you really need to be purchasing stocks under a business name. But perhaps Shantae, if maybe you can expand on that. I mean, are you referring to buying stocks inside of a retirement account, or is there any background, to that question? Because most of the time there really is not a reason to buy stocks in the name of a business unless there's a corporate account for a larger organization that's being set up. So I'm happy to come back to that if you want to share a little bit more.
Yeah, not a problem. I think it was more so just if there were actually any benefits. I mean, I have it individually. I have them set up in my in my IRA. I've got my 401k. Like, I have plenty of them.
Yep.
I just didn't know if there were more benefits under a business name.
Gotcha. No, not specifically. The benefit from a savings standpoint comes with the wrapper. Okay, so the wrapper being, these are all wrappers, right? So am I still sharing? Yeah. So these are all different types of wrappers, types of accounts that have different benefits for putting the money inside of them. Once the money's in there, the buying stocks or bonds or mutual funds or whatever it is, that doesn't matter so much. The benefit is for the transaction of the money going from your business into these types of accounts.
Okay, perfect. Thank you.
Yep.
All right, we'll just go down the list over here. Frank asks, what is the process in applying for a business credit?
Yeah, great question. So the process for applying for a business credit card is the same process for applying for a regular credit card. if you were to go to NerdWallet or just Google and search best business credit cards, you will get a whole bunch of lists there from all the major credit card, Capital One and Citibank and Discover, Amex, they'll all give you a list there. And if you just click on the link to apply now, it's just going to take you to a slightly different application where it asks you a little bit about the business. When you are a solopreneur or a two-person partnership LLC, you are fully liable for the debt and any credit that is being given out. So while you can put the name of the business in, and it might ask you a question or two about the business or the type of business and the revenue, ultimately they are still making a decision whether to give you a line of credit on a credit card or not from your personal credit history and credit report. So if you've ever applied for a regular credit card where you're filling out that application, it is almost identical except for a couple of questions about the business. But the approval is still based on your personal credit backing up the loan. That's how that works. And I can also expand on that if we want.
Cool.
Okay, thank you.
Advice, or sorry, let me go down to Adrian. What's the name of the IRA for business owners with no employees?
If everyone can still see the screen here, the one in the top left is the SEP IRA. And you know, if you're putting under $6,500 a year away, then it doesn't matter too much whether you do a traditional IRA or a SEP IRA. But once you feel you're wanting to save more than $6,500 or $7,500 a year, if you're over age 50, then a SEP IRA is absolutely the way to go. That's what's going to give you the most capacity for savings.
Gladys, I see you had a question on the SEP IRA. Did you want him to expand on that?
Yes, please.
It says, can you go over what the SEP stands for and when it is best to use it?
Yeah, the SEP stands for Self-Employed Pension, Individual Retirement Account. It's a name that they came up with a long time ago just to give a title to a retirement account for small business owners, right? Essentially solo practitioners, if you will. So an individual accountant or attorney or photographer or painter, right? Someone who they have a business, they have a LLC, but it's just them. The reason for that is that if you had employees and you use a SEP IRA and the employees are, you know, they work normal hours for you, they're W-2, things like that, then you have to, after I think 2 years of them being employed with you, then any money that you put into the SEP IRA, you have to match for them on a percentage basis and put into their SEP IRA for them. So that's why I say a lot of times that's really best for individuals. And then once you have other people that are wanting to contribute to a plan, then there's some other options for you. And so just, yeah, best for individual business owners, solopreneurs who want to save more than $6,500 a year.
Thank you.
Yep.
Alexis, I'll come back to your question, but I'll just jump to Corrine since we're on the topic. When would someone want to opt for a traditional IRA over a Roth IRA?
Great question. The simplest way that I can answer that is that you opt for a Roth IRA if you think you will be making more money and in a higher tax bracket in the future than where you are today. That's the simplest answer to that. So Roth versus traditional is just the difference of, am I saving on taxes today by putting it away pre-tax, or am I biting the bullet, paying taxes today, but then letting it grow tax-free and not having to pay it again in the future? So if you think you're going to be making more money, or maybe you get married and you have joint income with a spouse, and you know your total income doubles and you're both doing well, then sometimes it can make sense to put money into a Roth IRA now because you'll need the tax savings more later down the road.
Great, thank you. Alexis asks, advice, do you have any advice on startup business funding?
Well, that's a fairly large
Right.
category that we could get into. And so
Alex,
yeah.
sorry, I was just going to ask if you had any specifics that you wanted to ask Rob, maybe something specific that you're experiencing right now.
Or maybe even context for it. Look, startup business funding, depending on what type of business you're in, can vary widely. So it is difficult to get startup business funding as a solo entrepreneur or an artist in that field. It is not as difficult to get startup business funding if you are building a technology and looking to get people to invest in the software to grow it and things like that. But long story short, depending on what you're doing, there's probably organization or organizations that give grants and opportunities and things like that to small business owners. So whatever field you're in, I recommend, getting on Google and looking for grant opportunities in that field space. And then if you're getting into larger operations, then things do change a little bit depending on what you're looking to build with your business.
Great. All right. So Katie asks, just starting out as an LLC, how should I be saving, planning for taxes going into year one when my business sells services versus goods?
That's great question. So the shortest answer that I can give you on how much to plan for taxes is to work with a tax professional. I know that sounds cliche or funny, but I talk to people every single day that want to save on taxes, and the first thing I ask them is, well, did you hire a CPA? Because they're the ones that are going to really help make sure you're putting enough away and keeping as much in your pocket. But that being said, if you are wanting to do it yourself, if you're using QuickBooks or something like that to track your expenses and the money you have coming in versus the money you have going out, there are tools right inside of QuickBooks that can help give you tax estimates. The other thing that you can do to just get really rough numbers is you can look at how much you're making each quarter, right? So January to March, April to June, so on and so forth. And at the end of each quarter, you can say, okay, well, I made X dollar. I had this much coming in. I had this many expenses going out. This is my net, right? And let's say it was $10,000. And if you think you might do $40,000 or $50,000 for the whole year, you can look at the tax chart to say, all right, well, I may be in the 20% tax bracket. So of this $10,000, I'm going to take $2,000 and I'm either going to save it and put it to the side, or I'm just going to send it into the IRS as an estimated tax payment. So, it probably sounds a little bit wordy on here tonight. And that's why I recommend that if you aren't sure of how to calculate that sort of thing yourself, there's some great software that you can use that can help you, or reach out to work with a tax professional is really the best way.
Thank you. Oz asks, what bank do you advise starting an account with in Charlotte? Which bank has the best deals for new small businesses?
It's really personal preference to be perfectly honest. Everyone has different experiences with different banks, but what I can tell you, and if you're just looking for checking and savings accounts, it's like, it doesn't really matter much which banks are you nearby or what do you think has the most ATMs. But if you're talking about needing lending from banks or to borrow money or lines of credit or home mortgages in the future, then smaller banks tend to be more flexible than bigger banks. So if you were to go to like a Bank of the Ozarks, has typically more flexibility in certain situations than if you go to Bank of America. But there's not necessarily a ton of, all banks will offer different deals. Chase has some good deals going on right now, I think, where if you put X amount into the bank and hold it in there, they'll give you a few $100 in, 3 months, if you do transactions or things like that. But, if you're looking for that, sometimes the Nerd Wallet and those websites can be the best to get those answers. About going and seeing who's offering the best stuff. I mean, I know I say Nerd Wallet, it's an awesome website. I'm a big fan of it, so I recommend folks using it for that sort of checking the best deals on bank accounts and credit cards.
Well, thank you. All right. Tanya asks, I'm currently an employee, but I'm looking into creating an LLC. My company agreed to hire me as a contractor. My question is about the savings part. Currently, I'm on a 401k account because my company matches it. Once I become an LLC, do you recommend I switch to an IRA and transfer the funds, or should I just stick to the 401k plan?
Yeah, that's a good question. So once you are no longer an employee, if that's how it's going to take place, you won't be eligible to put money into the 401k plan. So at that point in time, it will be totally up to you whether you leave the money in the 401k plan, which depending on the plan can be a perfectly fine option, especially if you're not really sure what to do with the money. Or you can roll it into an IRA. It depends how much involvement you want to have with it. If you're not really sure what to do with the money once you roll it over, then leaving it in the 401k plan can be a great option because you can just use the target funds in the plan and let it sit there and do its thing, even though nobody's really overseeing it. If it's a larger amount of money and you want somebody actively overseeing it, then you can work with a financial advisor who can help you make that decision of what to do with the money, because you want somebody actually paying attention to it for you because you don't want to do it on your own. So it's a personal preference, but as far as where you would continue to put money, as a contractor, you're then eligible to put money into things like a traditional IRA or SEP IRA and such. And so you would then ultimately go create your own savings plan as a small business owner to be able to save money into. The other thing that I would recommend is that if you are just starting out with this, you have no other clients, the company is going to be the only client for you right off the bat, you don't have to go create an LLC right away. That's not a necessity. It's a good thing to have eventually if you think you're going to stick with it and continue to grow the business. But right off the bat, you don't have to go out and pay an attorney and create a business and get an EIN and do all of this stuff. You can just file on what's called Schedule C of your taxes as a solopreneur. So just some food for thought there.
Great, thank you. George asks, can you make any suggestions as to what percentage of a business operating income should be allocated to marketing?
As much as possible. I think most businesses don't allocate nearly enough to marketing. But again, this is really a business to business question. It depends what kind of business you're in. It depends what kind of pipeline that you're able to create naturally. So that's just a very, very broad, a broad question. It's tough for me to say, it really depends. But, generally speaking, I recommend folks spend as much as you can afford to. That's how you're going to drive business and grow your business, but don't do it frivolously. So.
Mm-hmm. Katie asks, once we hit our break-even point as a small business, can you speak to general recommendations for how we handle our money? Business savings not invested, easily liquid, managing extra business profit.
Once we hit a break, can you speak to general for how we handle our money? Business savings not invested. Yes. Once you get to that point in the business, the first thing that I recommend that you do is make sure that personally you have a little bit of an emergency fund built up. And what I mean by that is truly an emergency fund. You don't go tap into it. It is just there for when life happens, because it will. Life happens. That's the way it goes. So, 3 to 6 months worth of your monthly expenses, that's your first goal in a personal account, emergency fund set off to the side. Okay, because when we don't have that and bad things happen, that's when we have to go and open up credit cards and have medical loans and all kinds of stuff like that. So get yourself at least a couple months at least for starters. And then the next first thing that you want to do is do that same sort of thing, but for your business. I recommend that same sort of, 3 to 6 months worth of your monthly costs for the business. So your office space, your materials, your software, whatever all that stuff adds up to, do that same sort of thing for your business so that if you have a slow month or a slow couple months, bills are still getting paid, you're not freaking out, and you're still moving forward, okay? After you've done that, that's when you get to the next question of, well, do we invest money back into the business in things like marketing or growing the team? Or do we need to pay ourselves out to grow ourselves personally, to be able to invest personally for retirement or kids' college education or whatever it might be? And so for those sorts of things, don't sweat the, interest rates and all that. It can just go into savings accounts, right? Until you get, $30,000, $40,000 inside of these accounts, don't sweat too much. Like, oh my God, I'm not getting any interest. It's not a huge deal. This money's just meant to be liquid and totally available for you. All right. So once you get to that point where you've got those, your bases covered, your basic insurance, your bills are paid, credit card debts paid off, all that good stuff, then you get to that question of, am I reinvesting in the business, or am I moving money over to my personal self outside of the business and, saving for retirement or a rental property or for my first house or whatever it might be. But that's a quick, just general guideline there.
Great. Thank you. Gladys, I see your question above. I'm going to come back to it in just a minute. April asks, when it comes to looking for business bank accounts, what are the main things to look out for? Interest rates, credit limits, perks?
Yeah, main business banking accounts, the biggest thing I tell people to look out for is the banking fees. You really want to know, how much has to be held inside of the account to avoid banking fees, if any, right? Best case scenario, you want bank accounts that, you have $5 in there and they're still not charging you a fee for it. You can't always get that, but like I know Chase, for example, one of their checking accounts is $300 in there to not have a fee. One is $500 to not have a fee. So you just want to pay attention to those sort of things, because it's just a stupid way for $5, $8, $10 to be, going out the door every month. Other than that, the best interest rates for large chunks of cash and stuff like that just tend to not really be available at traditional banks. They tend to be available at investment houses and through investment managers and things like that. But things you can look out for banks is what sort of credit card, opportunities that they have. And do they seem to be advertising things for small businesses and startup and stuff like that? So I know Chase and Amex, Capital One tends to be great with some of that too, but I know in most of Charlotte, the business stuff's not available. So but those are, I would say banking fees, I guess, is the biggest thing to always look out for.
Cool. Thank you. April's follow-up was to an earlier point, and I think it's credit card. Is the 0% interest plan you mentioned a credit card or a loan?
It's a credit card, but I mean, that's essentially, look, a credit card essentially is a month-to-month loan for us, right? We get to spend money on a credit card, and if that money doesn't get paid back to the credit card within a month, well, you're going to start being charged interest. That's a loan, no matter how you look at it, right? That's what a line of credit is. That's why they call it credit cards. Most credit cards, you only have 1 month to pay off whatever money you spent on the card. But if you get a 0% interest card, that's just kind of a version of like a mini loan to yourself for a short period of time. It's usually something like 12 to 20 months. Sometimes you can get a little longer than that, but that's pretty typical, where you won't have to pay any interest on the money that you put on the card, but you will have a minimum payment that has to be made every month, a couple $100. So that's why I say it's okay. 0% interest credit cards can be an amazing tool, but you do need to have a plan in place for making sure that you get it paid off at the, through the number of months they give you until it's going to go from 0% to like 20% interest at the end of that period. So you really do want to pay attention to that. It's good for short-term, lending money to yourself without having to pay any interest. But have a plan to pay it off.
So Gladys asks, when I looked into getting a credit card for my nonprofit business, the interest rates are high and hardly ever is deferred. Is this type of credit card also tied to my credit score?
I'm sorry, say that again.
The two, I can clarify.
Yeah, go ahead, Gladys. Yeah.
Hi, Rob. Thanks.
Yeah.
So, I've been trying to establish credit for my nonprofit. I wanted to know, was that credit tied to my social security number or to the EIN number? And is it one and the same?
No, it's absolutely tied to your social security number. The only thing that's going to come of that is that they're going to say, okay, it's it's in the business name. It helps from an accounting standpoint, but until the nonprofit gets to a certain size, which is fairly significant, you're applying for a credit card. They're basing, the money they're going to lend you to spend money on the card based on your ability to pay it back. So.
Okay, thank you.
Yep.
Oz asks, would you advise having two banks, one that has better loans or deals and one that has more ATMs?
No, you just have one bank. Keep it simple is fine, because you can go to any bank that you want to get loans and things like that. It doesn't really matter. ATMs is just all matter of preference now. So a lot of companies are even offering like 0 fees on their ATM, using other ATMs and such. So I mean, I wouldn't go through the hassle of having two bank accounts. I mean, look, if you have business banking and personal banking and you're starting to accumulate some wealth and have, some, decent sized checking and savings accounts, then yeah, it can start to make sense to have separate banks. Not a bad thing. But is it a necessity? No, not necessarily.
And then I think Oz's last question was, can your business be an LLC and a nonprofit?
No.
Okay.
You could have two that are related to each other, but they're two separate entities all together.
All right. Any other questions we had in the chat, or anyone need to raise their hand? I'm just checking here. Cool. All right. I think we all got a lot smarter tonight. Thank you, Rob.
Yep.
This is super helpful, and I feel like there's so many topics here tonight that we could probably expand on with more conversations like this, more CEI classes. So for everyone who came, thank you for coming out tonight. And keep an eye out on, I'll send an email to follow up with the deck and with more information, but please always check our Creative Convos page. We're always updating with new topics and opportunities to grow and sustain as creatives in Charlotte. So Rob, thank you again. This was incredibly helpful.
Yep.
We're super grateful. And thanks again, everyone. We'll see you all next time.
Thank you, everybody. Thank you for what you do. We'll see you soon.
All right. Thanks,
Thank
everyone.
you. Bye.
Good night.
Good night.